So if this is one of your focus strategy, rent to own, it's also called lease options. Actually, at Trust Your Talent, we usually say it's lease and the option to purchase. So this is a strategy that's actually quite popular, probably not where you are. Again, we'll talk about the markets and for some of us, why we choose this strategy as a focus strategy. It's also a strategy where you can be a little bit more creative. It's actually one of a creative way to make a single family home cash flow. So if that's where you're looking for, anybody have single family homes in your portfolio as rental properties? So yes, Ted, even though just one or two, there you go. So this is a good way of making a single family home cash flow. So first thing first, like anything you do things ethically and legally first. And as much as I want to be everything for you, make sure you build a very good power team to get you started on the journey. So if you're not the smartest person, it's totally fine. Leverage other people's time, leverage other people's money. Mainly at Trust Your Talent, we teach you how to leverage other people's knowledge and other people's resources. So I don't know if there's any realtors, mortgage brokers, or accountants in the room. It's okay if you're new and perhaps you don't have the time to do everything you wanted to do. You know, one thing I learned when I started investing is that don't be afraid to ask for help. Not just us, I mean, your power team members are there for you as well. So financial planners, accountants, even us as mentors, we're there on your power team to help you out. By the way, I listed a few accountants, tax advisors, lawyers. Who else should be on your power team that I haven't listed here? I just want a little bit participation right here. Irene, unmute yourself. Who should be on your power team that I haven't listed here?
Contractor, a general contractor?
Exactly. So contractors, if you're looking to force appreciate and make the property look better or add value to it, perhaps add a room, add another unit. And also in this particular strategy, mortgage brokers are really important. As investors, we're educated. And I mentioned that you have to know how to communicate with your power team members. Mortgage brokers are very important in this particular strategy. They're the ones that will help you tenant buyers reach the final guideline, to the end line, to the goal of becoming a homeowner. At the same time, I always advise investors that make sure you don't bring all the leads to your power team members because you're educated. You know how to speak to them. You know how to plan. So you're the leader. You don't have to be the smartest person. You don't have to be the strongest person. Perhaps you have your contractors, like Irene mentioned, to do the heavy lifting. And even you don't even have to be the bravest person. That's what I'm writing in Chinese in that little circle there, because you can leverage other people's courage as well. And if you have somebody on your power team who is always analyzing and have what we called analysis paralysis, usually these are the people that are very good at planning, and make sure you check your blind spots. You don't even have to be the smartest person because you have the whole community here to be with you. If you don't have the courage, you don't have the smarts, you don't have the experience yet, what you need to do here is know how to leverage other people's resources. So OPK, other people's knowledge, OPT, other people's time. And what we're doing here is to go through my experience and collective experience or examples of other team members at Trust Your Talent. And this is what we do as mentors. Even though you might not think we are on your power team, we are there. We are one of your power team members to help you check your blind spot and give you that little push when you need it.
Beat me, hate me, you can never break me. Will me, thrill me, you can never tell me. Chew me, sue me, everybody do me. Kick me, cut me, don't jump like a fight me. All I wanna say is that they don't really care about us. All I wanna say is that they don't really care about us.
That little push might be just something that you need at this point in time. I know a lot of people like myself, when I started, I was waiting for that moment. not knowing when to get started. Opportunities are there for those who are ready to take it, and for those who just need that little push to get started. So if that's what you need, we're here to get you motivated, and just not us as mentors, and also the whole community is here. So a little bit of housekeeping. It's okay if you're having dinner, if you're driving to a birthday party, whatever you're doing right now, or perhaps you're also working. If none of the above, make sure you're here with me. Focus. So follow one course until successful. So thank you for turning your camera on. That's why we always mention who have your cameras on, who is here with me today. Participate. By the way, if I'm going too fast or there's something that's on your mind, a burning question, raise your hand. If that stops you from learning, from getting to the next level, let me know. I can see you on screen. So even though it's virtual, I'm here with you. And first thing first, you have to learn how to learn first. If you're just here to read the slides, that will give you 10% of your learning experience. If you hear my words, so it's important to focus. Have your headphones on, I appreciate that. Or just turn the volume up. Hear it and see what we're doing right here. So if you actually take action, see and hear and participate, that's where you get 70% of the learning. And I also encourage people to repeat what you learn here. That's actually how I learn and how other people learn as well. If you have something that you want to share, I love that. I love sharing with you guys. So every day when I get the opportunity to share or help people to reach their financial goal, I send out my appreciation. Because at the same time, I'm also gaining from the experience. I'm constantly learning, not just because I have to teach. Also, the market is constantly changing. That's why I trust your talent. All of us on the team, one of the prerequisites is that we have to be active investors. So I get that. Sometimes you're thinking, I don't have a lot of time. I have to take care of my kids. I'm still working. So I know some of you are working right now. I can see that. I really appreciate you. Appreciate you giving yourself the opportunity and giving us the opportunity to give. So you know how we feel sometimes we get something that's so valuable, we really want to share with somebody. If you're here by yourself, you might be investing with your partner, with your spouse, or with your siblings. Perhaps you're here to learn. And pass it down is when you say what you do and take action. And also by the time you're able to teach and digest, that's when you take it to the next level, when you learn. So this is the learning pyramid. If you're learning passively, you start to take action. You're already taking action today to spare yourself some time to learn. What's the 10%? I think it's really, really important to remember the experience. So if you're having fun today, I think that's when you'll remember what you learned, because we don't always remember everything we see or learn. Get as much as you can, and you can watch the recording. Take action if you want to get the slides as well to review. What's that 10%? Is when you remember how you feel. So perhaps in your second grade, you have a teacher that reminds you of how fun learning is or what second grade feels like. That's part of the learning experience as well. When you have that aha moment and having so much fun. And of course, this is about financial education. So to get yourself started, I'll show you some data. Perhaps that's where you are right now. You're thinking, how much do I need to retire? How much do I need to save up to have financial freedom, to have the time, to have the energy? So really, financial freedom is defined as do whatever you want, whenever you want, with the resources that you need, with FU money, perhaps. However, if you want to learn how to put it down on paper first, then this is really where you have the resources when you're sick and your money is still working for you. So we simply define it as when you have enough passive income to cover your basic expenses. So for most people, perhaps you're working still, cover basic expenses by trading your time for money. When you're building up your business, I get that. You want to build your capital first by trading your time for money. I will go through the different types of income later on during the webinar. And if you're wondering, I know some of you look really young right now in front of the screen. If you're thinking, how much do I need to retire right now? So using the 4% rule, a lot of financial planners use that term, 4% rule. If you've ever been to a bank, if you have mutual funds with one of the big banks, or even check this data, even in the States, I know some of you are learning from the States as well. Even in the States, the 4% rule is often used. What it means that if you have the resources and say, for example, I'm using $75,000 and as the annual income you need to cover your expenses. So basically, if it's $1 million, 4% rule, that means you get $40,000 a year. So when you go through financial planning, if it's 4% rule, that means if you have $1 million invested, just sitting there, constantly make 4%, you get $40,000 to live on every year by the time you retire. However, is that really enough? Actually, I pulled the data from where I live in Ontario. You need $75,000 to cover your basic expenses. By the way, if you have lived in the market you're in right now, because I'm looking at the screen, I'm sure most of you want a life that's not just covering your basic expenses. So let's be very conservative. If you can get $75,000 a year at 4% return, you will need 1.9. You will need 1.9 million saved up, sitting there to support you after you retire. Whatever your goals might be, you don't have to retire at 65. If you have that $1.9 million, perhaps you want to retire today. So if you're able to generate more return on your investment, using the same analogy, $75,000 a year. Let's just say once you're investing, you know that you can generate better return on investment. Let's be a little bit more conservative. Let's just say 6% of return. You need $1.2 million instead of 1.9. What I'm showing you here is that if you know how to structure your portfolio to make that 6%, even if we just look at 6%, I know some of you are investing already and you're looking at more than 6%. I'm going to show you one strategy today that will help you reach that goal a little bit sooner, because the return on investment is basically how fast your money can run for you. So instead of waiting and saving until you get $1.9 million, if you can find a deal that will generate 6% of return, you just need $1.2 million. Imagine if you can find a deal that generates 10%, 12% of return. How quickly can you run? How soon can you retire? How fast can you reach your financial goal? So actually in Canada, 2022, the median income after tax is $75,000. That's why I use the data. However, in Canada, the median net worth of Canadian family is $329,000. So I think we really desperately need financial education, not just for those of us interested in real estate or paper asset, etc. It's really crucial for people today to understand how money works. Really, we're using real estate as a vehicle. We're utilizing real estate as a vehicle. So study shows that 90% of the population are basically living paycheck to paycheck. That's what it means. Every dollar they make, they spend it. So you're really here to be that top 5%. So start from being the top 10%, 5%, perhaps even the top 1%. And a quarter of the Canadian are not able to cover expenses with a $500 increase. That's basically what it means. So if you're looking at the gas prices, if you look at utility bills, easily with inflation, we're looking at more than $500 of increase in expenses. So to start, I usually look at different goals. If your goal right now is just simply to cover additional expenses of an additional trip, family trip, or perhaps you're looking to buy a new car, you're paying $500 additional per month. That means that's $6,000. So set a financial goal, whatever you need currently right now. And if you're looking at 20% of return, look at how quickly your money can run for you. That's why you learn about joint venture. What if we split 50-50? It's okay if you don't have the financial resources. Perhaps invest some of the sweat equity you have. So for seasoned investor or educated investor, your sweat equity doesn't have to be building a new house, doesn't have to be being a contractor. It could be learning. It could be finding a very good deal to share the wealth. So if you're able to do that and generate additional income of $20,000 per month, that means you're making $240,000 additional per year. Okay. What if you're partnering up with somebody else? I see that perhaps Kevin, for example, is working with Jonathan. What if you can both put in the effort? Or it doesn't even have to be your partner. It could be somebody else. It could be your business partner. I know some of you work with your siblings as well. So times that by 2, that's $480,000 a year. This is about getting rich for sure. I'm not telling you you're going to be able to do that tomorrow, just after the webinar today. We are here to guide you step by step. What are you going to do next to get you closer to that goal? That's why I'm going through one example. That's just one typical example of a lease option. What if you're able to structure another deal similarly per year, or 3 or 4? Even if it's just 4 deals per year, that means you're only working quarterly to find a really good deal. So what if you refinance? What if you leverage other people's money? Imagine how quickly you can run. So in this webinar, we will talk about lease option. We also have webinars talking about how to scale if you're looking for fix and flip, or if you're looking for income property. And that's when we see the power of refinancing and scaling as well. To get you started, as I mentioned, we're going to take you step by step. First thing first, set the foundation. I know you probably hear this a lot, especially in the beginning of the year, first quarter. What is your why? What is your New Year resolution? By the way, perhaps you don't review it every day. However, you might want to review your why, your current situation, to see if you need to adjust or pivot. Look at your why, where you are today. And if I look at my goal in the beginning of the year, it's very different from where I am right now. I'm traveling perhaps half of the year this year, which I didn't anticipate. So I might need to pivot in terms of my expenses or how I allocate my time. So same thing for you. It's almost the middle of the year already. I remember when we started the webinar in the beginning of the year, talking about different strategies. So if things have changed since the beginning of the year, you don't just look at your diet once a year. So same thing, if you're looking at your financial health, review it periodically, perhaps quarterly, perhaps every half a year. So you might be planning for your wedding or something else happen in your family. The strategy is not just about the hard strategies. It's about what they're going to do or how they're going to change your lives. And that's why you want to look at how you define your goals. So activity without purpose, that's when you're just aimlessly looking for deals. Or we sometimes say, are you feeding your ego or your bank account? If you're purposely looking for deals and looking at how it's going to feed or enlighten or align with your goals, then that is how you purposely invest. If you haven't figured out what you want to focus on this year, this is here to guide you towards the next step. Are you really looking at or focusing on your health this year? And I get that sometimes when we started investing, we feel like we cannot sustain this because some of us still have a job. We still have families to take care of. So I appreciate it. I know some of the ladies are here, even though they have to take care of the kids. Is this sustainable for you? Perhaps something happened last year. We really want to focus on joy, fulfillment, impact. So if you don't know what you're going to focus on this year, look at the core values at Trust Your Talent. And perhaps one of them really resonates with you. That could be where you want to focus on this year. So this year, for example, I want to make sure I can make an impact in other people's life. What is money or financial freedom? If you're not able to share it, or help other people do the same thing. So this year I'm focusing on impact. I think that's gonna ultimately bring joy, fulfillment into my life. And if you're thinking health is really important to you this year, perhaps something happened last year or something happened to your family member. I get that. If you don't have your health, there's no additional resources to pursue any other values here. So if you don't have an idea yet, or you're looking to pivot, think of which value resonates with you the most. And I know a lot of you are new here in the group. If you don't have a strategy coach yet, make sure you take a picture of the QR code, scan it, and talk to one of our strategy coaches. Because really our goal is to guide you step by step. So you can just think about it. If you just think about it, it's a dream. It's really not happening. If you envision it, so sometimes it's hard to envision. That's why being here, or when we show you an actual example, it's easier to envision it. It's really when you schedule it, it's real. Have you had something that you always wanted to do and you didn't set a deadline or a goal, a timeline, and it's never achieved? So make sure you schedule a call with our strategy coaches. We also talk about SMART goals. So SMART goal, the T represents time. Find something that you can honestly and realistically fulfill or achieve in a specific timeline, okay? So to get you started, a little bit of participation here. I'm gonna ask you why you're here today. It could be your short-term goal, it could be your long-term goal. I wanna know what you wanna learn and why you're here today. Once you see it, put in one of the answers that resonates with you the most, or that's where you are today, okay? I'm starting to see the answers coming in. Thank you for participating and answer it in a timely manner. So I think everybody put in their answers. I'm gonna share the results. Can everybody see my screen when I share the poll results? Thank you for the nod and the thumbs up. So today, within the group, most people are looking for consistent cash flow. Okay, it is a strategy that's gonna generate significant cash flow when it comes to help you reach your financial freedom goal. And number two is accumulate capital and also build legacy for the family. A lot of the times we want to build legacy, and that's also sustainability. Take it to the next generation. Thank you for participating. By show of hand that you have kids, you have a family. We are just here to remind you that you can actually take action pretty quickly to help you take you to the next level. So I don't know if any of you participated in the previous webinar. Anybody joined Buy a Mobile Home Park in the US? If not, we're gonna have, okay, Mike, you have. If not, it's actually on our website. And also if you go to YouTube, find Trust Your Talent as well. We have the links through our website. At the same time, every time you miss a course or miss a webinar is open to everybody. So if you have somebody that you really want to help as well, share the link, trustyourtalent.ca, or go to YouTube, find Trust Your Talent channel. There's also Daily Dose with Tim. We go through a lot of basic concepts and strategies as well. And next, I think somebody mentioned, you want to accumulate capital. Basically, private lending or being the bank is how you look at how the banks operate, or how as investors, once you accumulate capital, it's one of the ways to be more passive. I mentioned it depends on where you are in your life right now. So for me, when I'm busy, when I'm focusing on teaching, creating a curriculum, I find deals that are more passive, or I find opportunities where I can work as the bank. Another thing is we constantly need to remind ourselves how we should pivot. Even though the next webinar is about choosing the right strategy for newbies, I think it's also a good reminder as to how you look at your portfolio. And a lot of you are looking at how to accumulate capital. When we did the survey, so fix and flip is a way of generating capital and look for a relatively short-term strategies as an investor. That's why you need to look at different strategies depending on where you are financially and also in your personal life. So if you're looking to join us, take a picture of this page And if you're on our mailing list, you will receive the calendar periodically. So the next one is underwrite your own private lending deal. I also want to see you in Toronto live. And every time we have a live workshop, there is a connect. So networking event right after the Saturday class. So perhaps we'll see Kevin there. Perhaps we'll see Ted there. Mike, make sure you join TYT Connect as well. Usually it's very popular. We sell all the tickets very, very quickly. So if that's the case, if you haven't registered, make sure you do through our talented webpage. And what I really love about everything we do is that we actually build a community. I get that we spend a lot of time designing the curriculums and make sure you have the tools you need in your toolbox. At the same time, it's important to have the community. And that's how I started. Everybody I work with on the team, we were students at one point. So some of us already knew each other and we were working together and started just where you are today, sitting in a webinar to get ourselves started. And perhaps it's a refresher for you. And if you're here as a refresher, like I mentioned, think about how you can share the knowledge, share the wealth. And it's so important to have a community because sometimes it's lonely being an entrepreneur. A lot of the times we just sit in front of the computer, analyzing the deals that we receive through emails, through our realtors network, or from other wholesalers. So it's important to have somebody to brainstorm with. So have the mentor to check your blind spot. By the way, our goal is to teach you how to fish. It's not to give you the fish. It's not to tell you exactly which deal to get into. And that's why you have to equip yourself as a seasoned investor. And I also want to mention that the workshop is for you. And also if you have a partner that you're working with already, your spouse, your sibling, even your mother. I've seen mother and son or mother and father or the whole family coming to the webinar. So the workshop is basically buy one, get one. So come with a partner, come with your spouse. Cash referral bonus if you're already a student in the community. So I've seen a few students. So Mike, Ted, Mohammed, if you have somebody you want to share the wealth and knowledge with, this is how you do it because we want to make an impact to make it sustainable as well. So there is cash incentives for students that are referring other students coming to the community because Oprah is my hero basically. She opened up schools and she has book clubs because knowledge is not complete until shared. That's her philosophy. And I do believe that as well. There's a lot of resources at Trust Your Talent, whether you're registered students or not. So same thing for you. If you learned anything, even if it's a refresher for you, if it's just one line I said or a quote, or even just a quote, that means that, hey, it's your opportunity to share. If you hear the same thing and it really resonates with you, share the knowledge, share what you learned today. By the way, I usually share a very simple example during the webinar. At the same time, think of yourself as a working partner or as somebody who want to share their knowledge. Can you explain the strategy to somebody else when they give you 10 minutes, when they give 20 minutes of their time? So webinar is designed for people who are new or perhaps haven't started investing. For some of you, it is refresher. However, I think there is value as to how to simplify things. So I hope one of my superpower is to dumb things down because complexity is usually sometimes what stop people from going forward. A lot of people are not getting started in real estate investing because it sounds complicated. It sounds like you need a lot of money. However, it doesn't have to be the case. So we can start from something really simple. Start from the mindset. So regardless of what strategies you're getting into, you'll realize that Trust Your Talent, we follow the same rules. You don't have to reinvent the wheels. That's why the fundamentals are so important. And you already told me why you're here today. I'm pretty sure that's because something in life, perhaps it's your purpose. By the way, a few of you mentioned you want to build a legacy. What's your purpose or what you really want to achieve this year? Do you want to give back to the community? So regardless what it is, it really starts from you. that translates to what kind of income or what kind of strategies you're going to focus on. We use the term portfolio income, basically paper or being the bank. So if you have equity in your home or money you can invest you haven't tapped into yet, that's portfolio income. And any of you looking into paper assets, by the way, that's also portfolio income. That's also portfolio income. You can also say money in the buy, or perhaps you're sitting on the equity of your home. If you don't have equity yet, or if you haven't built or put money into your piggy bank yet, you can fix and flip to build some capital, because fix and flip is basically a short-term strategy. So you can trade time for money. You have to put in the work. Why do we call it earned income? Because you have to constantly look for a deal. And lease option, what we're going to talk about today, is one strategy that covers all buckets of income. Earned income in there, passive income, because you're generating cash flow. I know majority of the people today are looking for a strategy that's going to generate cash flow, or money in the buy. So when you get into, for example, wholesale, or when we say make an embarrassing offer, because you're looking for money in the buy when there's already equity, or you buy under market value to get you started. So when you look at different buckets of income, once you're a little bit more advanced, look at it as earned income, not just trading your time to support your lifestyle. Look at it as earned so you can create or generate enough capital to accumulate capital. So I look at earned income as generating capital. I look at passive income as cash flow that help you reach your financial freedom goal. Your portfolio income is basically creating wealth or generating wealth. So when you look at building legacy, you need to have that piggy bank ready. If you're passing it down to your kids, for example, really you have to pass down the know-how. Otherwise, they have to break the piggy bank. Okay. So I highly encourage you, if your kid is old enough to learn about this, they can even watch the clips. If you haven't done this, and we're going to do this in the workshop as well, if you have played the cash flow game, simple spreadsheet to get you started. What's asset versus liability? I mentioned Daily Dose with Tim. Watch season 2, episode 2, asset versus liability. So perhaps you think it's pretty basic. At the same time, when you do your financial statements, do this periodically. Honestly, I do it quarterly or every month. Once you have it set up, it's easy to go back and review and modify it. And look at what's your financial independence and financial freedom goal. By the way, I'm going to volunteer somebody in front of me. Let me know what's your understanding of financial freedom versus financial independence. Ted, unmute yourself. Perhaps help out your fellow students in the room. What is financial freedom? What is financial independence?
Financial independence, covering your bills, covering your phone, cable, rent, all that. Financial freedom is you have enough to do whatever you want, when you want, with who you want.
Thank you, Ted. I love that. That's your interpretation of financial freedom. It could be different for everybody. Financially, as we look at financial goals, so as an investor, financial freedom is when you have enough passive income to cover your basic expenses. So if you're still working, financial independence, perhaps it's easier for you to look at how to replace your income. Financial independence is basically looking at all the strategies, not just cash flow, all the strategies, the income you earned from real estate investing, that's going to cover your expenses. If you're working right now, perhaps you're looking at how to replace your working income. So financial independence is basically all the income combined. So perhaps you're doing fix and flip, even though it's earned income, it's not generating cash flow. It will help you reach that goal. Financial freedom is passive income. So cash flow. So like Ted said, by the time you reach your financial goals, look at the next level when you have FU money, when you have the time to do whatever you want. That's the next level of financial freedom. So one thing we look at is how you maximize your income protection, how you make sure you keep the most you can keep. That's when we talk about tax planning. and protection, building up corporations or building up the strategy that's going to protect you to make sure it's not how much it costs you, it's how much you can keep. Ultimately, it's tax protection and the different strategies you're going to use or utilize. If you don't plan to fail. Okay. So when you get to the workshop, you will have the time to go through the financial statement and complete it. If not, reach out to your strategy coach. Take action and get it started. After you look at where you are financially, this is our curriculum. So we want to make sure you learn like you're in the university setting. So we call it academy because you have a major, you have the courses you must take, even though that might not be your major. So for example, when you get started, even though I talk about the foundations, you have to do your own homework, find your why, find your goal. It takes quite some time to go through that, even though it looks quite basic. So this year, what's different is for existing students. And also once you become a registered student, you have to make sure you complete all the core courses before you come to the mentorship. This year, we make it mandatory. You're not able to move to the next step. Like I mentioned, because we take you step by step. Everybody will need to understand business fundamentals, like how to protect yourself, tax protection, how to build up your corporations, who do you need in your power team, and distressed property, fix and flip, for example. Why do we make it a fundamental course? Because everybody needs to know how to force appreciate. It's really about control when it comes to investing. And financing fundamentals. Even though I'm teaching creative financing and financing fundamentals and also the webinars, it's not because I'm partial, it's really because it's so important when it comes to financial education to have the foundation. So if you haven't even applied for a mortgage, no problem. You can learn how to leverage other people's money, other people's time. And like I mentioned, this is financial education. A lot of the things you learned, you can leverage it, and perhaps you have other businesses as well. How you set up the corporation also depends on if you have other business, for example, if you have family, if you want to build a legacy. And when it comes to fundamentals, it's also applicable when you have 7 streams of income. On average, millionaires or people who are considered the top 1% have 7 streams of income. So it's all related. When it comes to the hard strategy, we're calling it 3x3 right now because you need 3 different strategies to have multiple exit strategies, to have control, to know how to pivot as the market changes. So that's why I trust your talent right now. You need to have 3 focused hard strategies at the same time. And soft strategies, creative financing, and learn how to negotiate through raising funds, portfolio management, design and staging, asset and income protection as well. So after you become a registered student, after the workshop, the next step is understand how asset and income protection works. Regardless of what your hard strategies are, you need to understand how that works. So even though we put creative financing as a soft strategy, there are also students who read financial freedom, just being the bank, understand how money works. So lease option, for example, is one creative strategy, how we creatively structure the contracts, the deal. So it's also a vehicle where you can use as an acquisition strategy when it comes to creative financing. Just put it out there if you're wondering how everything worked together when we design the curriculum. So your strategy coach, like your counselors in school, they will take you step by step and suggest what courses you're going to take, what are the next steps for you. So even before you get started, make sure you complete the core courses, set your foundation as well. I want to hear all your stories. So by the way, if you want to book a time with me, I want to know where you are. My story is basically here to perhaps give you examples. I hope there's part of my stories that resonates with you. That's the purpose. Really, the webinar is not about me. Like a lot of the investors, we started from one strategy and then we pivot or opportunity arises. And sometimes the market change. The markets you invest in might not be the same as a few months ago or even half a year ago. So you start to pivot. That's why 3x3, multiple exit strategies. I'm from Taiwan, which is where I am right now. you can travel and your business can still run. And I started my journey in 2016. It seems like a long time ago. At the same time, I still remember vividly when I sat in your seat, in your position to get myself started. I put a picture of my family here to remind me that's why I got started. Because we mentioned it's not about how much it costs you, it's about how much you can keep. Or it's not about how much you earn or how much it costs you, it's how much you keep. So when I stayed home with my kids for 10 years, I never thought I would go back to work, actually. And when I started working, we have double income and we were paying a lot of tax, even though we contribute to RSP. So I wanted to learn how to keep my money. The only piggy bank we had at the time was our property in Toronto. And the only basically wealth I see is in real estate. That's what I really want to learn about how to invest. So I thought if somebody's willing to show me how, I'm willing to put in the investment to learn. And I mentioned that it's really about impact once you reach your financial freedom. By the way, when I started planning for my book, I didn't reach financial freedom yet. I was close and I didn't have a title for my book, but my coach suggested that I put financial freedom, even though it's a term that a lot of people are using. However, people can understand it. And my goal is for people to pick it up. And then basically I follow the journey, the system that TYD set up for the students. I follow the same system. So instead of having a resume, I just hand out my book to show people, hey, this is perhaps how you want to get started. So I thank the community for buying the book when I started to publish it. It was just before Christmas 2020. So during COVID, actually. And it was sold out at one point because, again, we have a community that support each other's success. And for me, actually speaking in front of people is the hardest thing for me. And my voice would start to shake when I had to present, when I had to start to speak to people. And you can imagine how hard it is when you have to present in front of investors. However, I still had a very good community and I started to network like crazy, even though it's hard for me to speak. So being here, that's part of the training for me to speak in front of an audience. So I hope you set your goals as well, whatever it may be. And another goal I had was build our home. So if you're thinking about the same thing, it could be have $6,000 to travel this year with your family. And for me, when I started investing is to move to a bigger home. We started from a 1,200 square foot for a family of 4 in Toronto. So if you look at your financial goal, I use this example. If you want to say, for example, be able to afford another $100,000 in mortgage, then look at an opportunity that give you, say, for example, $600 per month that help you pay another $100,000 of mortgage or ability to qualify for additional mortgage. That's how I look at my goal. So each lease option, divide that by half because I started to look for joint venture opportunities. Each lease option will help me afford another $50,000 of mortgage based on today's rate. When I started investing, basically one lease option will help me afford another $100,000 of mortgage. So everything we do, convert it to your financial goal. What is your personal goal? My personal goal, beyond financial freedom. So do whatever you want. Contribute the way you want to. I get that. You're probably thinking, I don't want to trade my time. What if you're trading your time to do something you love? Perhaps Mike is related to food, cooking, whatever it is. Kevin perhaps is contribute to the youth. Whatever it is, you want to contribute your time to. So for me, I appreciate every opportunity to help. So some of the pictures are the people that I work with at Trust Your Talent, the class, and also in the corner are my tenant buyers that help me reach my financial freedom goal. By the way, they did sign consent for me to show their pictures. So all the tenant buyers I'm showing here have reached their goal of being homeowners. And that's why it resonates with me so much when it comes to real estate investing, how you can reach your goal. Perhaps it's just helping people. Yes, it feels good. At the same time, is it a win-win-win for your investor, your power team member, yourself, even your family, your kids? Can you spare more time once you reach financial freedom? And for me, I mentioned that, hey, I want to make an impact. Whatever it is, as shy as I am, I realized I had a voice. So when I reached financial freedom, I actually felt like I don't know what to do next. What is my purpose? I'm already helping my family. I'm actually given the opportunity to help future investors like I'm doing here today. So if you're like me, you're probably wondering, or when I was wondering where I should be or what the next step to take. For everybody, I think your purpose should be help other people, inspire other people, and make the world a better place, whatever it could be, whatever you're good at, whatever platform or stage that's given to you. So wherever you are, I talked about a lot of different things. Reach out if you're starting. I have talked about why we want to get educated, where I got started, or even as an immigrant, or enjoy food and drinks as an investor, invest as Chinese, whatever it is. If there's something that you think could be of help to you, reach out. I have a podcast for it, or Tim's Daily Dose with Tim at Trust Your Talent. And our goal is to help create financial independence and get you out of the rat race, if that's what you're looking at today, in 2 to 5 years. I've seen students complete or achieve their goals within a year. And as for myself, it took me 3 to 4 years. And I thought I was running fast. However, I realized that if I had a system like Trust Your Talent, I follow a very similar path. However, we constantly improve. We constantly improve at Trust Your Talent. So we can help the students run a little bit faster at the same time, because you don't have to reinvent the wheels. Imagine if you can build upon other people's experiences. When it takes us 2 to 4 years, 2 to 7 years, it might only take you 3 years, 2 years, whatever it may be. Regardless, our goal is for all the students to reach that goal. I'm not guaranteeing that you're going to reach your goal within the next month or so. Some of you might be able to if you have the resources already. However, I found a lot of the times is to get yourself comfortable, or to make sure you have the knowledge to do so, to get yourself trained. If I'm not making a difference in your life, like the quote here, you can log off. I completely understand if I'm not making a difference in your life. If there's just one thing, even when we go through the goals or setting your financial strategies that resonates with you, then my goal is achieved. So our goal is to make a difference in your life through financial education. And we're the only institution or academy that provides curriculum in Canada and the States as well. So a lot of us on the team, or some of the students already, are investing in a different market. It's basically, again, S&P. If you want to expand your market, consider US. A lot of things can apply. If you're, say, for example, investing in where I am, Taiwan, the same curriculum might not apply. However, if you're looking to invest in Canada and US, we have the curriculum for that. This is an education-only academy, which means that we don't do deals directly with students. I'm not here to sell you my deals. At the same time, if you're ready, if you're part of the team, the next step, perhaps you want to contribute. I know there are a lot of students who are student ambassador already, so like us. So once you're financially free, we'll take you to the next level. If you want to give, and like some of the students here already, if you want to give and participate, that's how I started too. I started as a TA, or student ambassador at Trust Your Talent. For me, not just about giving back, at the same time, I will constantly learn when I'm part of the class as well. So it really depends on where you are. One thing that's consistent, regardless of what strategies you're looking at, or whatever you do in life, we look at opportunities where we can create win-win-win-win-win. Perhaps it's win-win, at least find 3 wins when you look at different strategies or deal. We're in control when it comes to lease option. And there are a few things, even though it's about numbers, there are a few things you need to set up correctly to make sure you can set up your lease option or rent your own business for success. So that's my goal today, to make sure you understand how it works. There's a lot of moving parts. That's why it's a 12-hour advanced class. Once you started to learn about more advanced strategies. At the same time, to get you started, like I said, I aim to make things a little bit easier, simpler for people who just want to learn the strategy to get started. We call it lease option at Trust Your Talent. We don't call it rent to own when it comes to our terms, the language we use. There's a lease contract and then there's an option contract. If you are, for example, invest in stocks using options, option is basically giving you the right to purchase a property. So for the tenant, it's giving them the right to purchase the property. The lease is a lease. Before the tenant buyer can qualify and decide to exercise their option to purchase, there's still a tenant. So there's a lease. The difference is that a lot of the times when you're the landlord, you have to fix a lot of things. When it comes to lease option situation, we're training them to be homeowners. So we give them the option to perhaps renovate a little bit. They have to pay for utilities and minor repairs. So business decisions, how much they can spend on repairing. I don't encourage tenant buyers to buy a fixer-upper, even though there's money in the buy. However, they're homeowners in training, and we don't want them to wreck their credit if they spend too much. If they put all the repair cost on their credit card and they're not able to pay it. So I usually set a limit as to how much they can spend to repair the property. At the same time, remember it's still a property you and your investor own. When they do minor repair, they're actually adding value to your assets. However, the end goal is for tenant buyers to be homeowners. Remember, that's the main goal. It's not to fix and flip this property, even though that could be one of your exit strategies if things don't go according to plan. So now comes to the option contract. Basically, it gives them the option to purchase, underlying option, because we call it option contract, and it's not an obligation. And when you go through different strategies, you realize that, hey, there are a lot of contracts to go through. Whether you get into income property, the purchase agreement, whether you get into lease option, the contracts, every contract or option contract, for example, there has to be at least $1 involved to make the contract valid. For the tenant buyers to have the option to purchase, they put in what we call monthly option. We call it option deposit or option consideration. When they first come in the program, they put in what's called an initial option consideration because they come in the program as their commitment to get started. That also make sure that they do want to enter it. They want to have the option to purchase. The initial option consideration, the money that they put in, basically give them that option. At the same time, every month they have to put in what we call monthly option consideration. So these are the terms. I will show you how it converts or translates to money. So why do we want to get into rent to own? Like everything, there's a reason for us to get into it. For the investor, like a lot of you mentioned that you want to create cash flow. If you have already owned a single family home or a rental property, you know that it's all next to impossible to make a cash flow. By the way, that's a recent data. I will share it if you're interested. Of all the cities in Canada that they had surveys on, for single family home to cash flow, it only happens perhaps in Winnipeg. Or that's why there's so many renters. Renters look at, is it cheaper for me to rent or is it cheaper for me to purchase? Put aside their credit score, if they have the down payment, it's actually cheaper to rent because they don't cash flow. It costs actually more for the homeowners or for the rental property owners. Regardless, this is why we look at alternative strategies or creative financing vehicles because we can make a single family cash flow with a lease option strategy. We lower the acquisition cost, like I mentioned, because tenant buyers come in with what we call initial option consideration, IOC. If there's any abbreviation that I put out there that you're not familiar with, raise your hand, because I realize as investors, sometimes it becomes a second language. So same thing for you. Once you started investing, make sure when you explain things to your investor or people who are interested in investing that you're passing down the knowledge. Make sure you're considerate of that. Control, because we define the profit. There's no speculation when it comes to lease option because you know what your monthly rent is, how much option the tenant buyer is coming in with every month in the beginning, and also what your profit is going to be because you know how you're going to sell the property and at what price. Okay. So one of the objection I had, you don't have to have one strategy. I mean, sure, there's a reason why people get into lease option. And when I started investing, and I started in Ontario, from 2017, the property price never went down. So a lot of investors are saying, you have a defined sell price with the tenant buyer. What if the property value has gone up so much, and we've seen even 30% increase in some markets? So at that time, not all investors are interested because they're not interested about having control. They think if they speculate, most likely the property value will go up. However, that's a different strategy. To me, lease option is a strategy with control. If you want to sell properties at fair market price, for example, perhaps fix and flip. So you add value to it, even so you're depending on the market price, you're still having control as to how much money you're going to put in, how much money in the buy. So buy a property under market value. Again, it's about homeowner and training. So we want to make sure they're committed. That's how you set them up for success. Homeownership in 2 to 4 years. If you have somebody, if you look at their credit report, they have recent bankruptcy, perhaps it takes them more than 2 to 4 years to complete the program. Business decision as to if you will still want to take them and help them. However, a lot of the times, if you're not able to, you're going to have different vehicles. So for example, I've helped tenant buyers with alternative mortgages because they don't know there are B lenders out there. Perhaps they don't need to come into a lease option. There are other ways to help them, and you can even be the mortgagee for them. Regardless, business decision, like I mentioned, 2 to 4 years. When I started learning about lease option, a lot of deals are just 2 years. However, with today's market, I've seen lease option, now we say 2 to 4 years, and often it's 4 years because the market changes. I've also seen lease option 5 years. Like I said, it's about your business. It's your own business decision. However, can you set them up for success? And another thing is, if you set a lease option for perhaps 4 years, 5 years, there's, to me, just as a reminder, the market could change. What qualifies them today might not be the case 3 years, 4 years down the road. So if you put them into a longer rent-to-own or lease option program, there's more variables. So it's up to you if that's what you want to do. So if we focus on a 2 or 3 year lease option, if you're getting somebody into 1 year lease option, usually I don't think that's the most effective way, because if they can purchase in a year, there's usually something you can do to help them. So credit repair, 3 things when you qualify for a mortgage: credit, your down payment, and if you have the ability to show consistent income to afford the mortgage. We can help them repair their credit with our power team and with your knowledge. We can help them save because option consideration will be converted to down payment once they're qualified and decide to exercise their option. So we can help them saving up their down payment, fix their credit. One thing we cannot help is provide them with a job and consistent income. Perhaps you could with your JOB or hire them. Regardless, we can help them with 2 things. That's the purpose of a lease option. So we're profiting every stage of the way. I mentioned initial option consideration. You can use the option consideration to perhaps pay for your closing costs, lawyer fee, or if you're familiar with putting in an offer, that could be your offer deposit to pay the agents when you look for a property. During the program, there's good cash flow and monthly rent plus option minus expenses. That is your cash flow during the program. At the end of the program, I mentioned that we have decided what's the price the tenant buyer will purchase at. So whatever proceeds or profit at sale, that's another way of making money throughout the process. Okay, so at the end, with the rent and the option, you pay down some of the expenses. A mortgage pay down with a little bit of appreciation of the purchase price, that's your profit at sales minus all the expenses. So we profit every stage of the way. So for every strategy, it could be different. For income property, for example, perhaps you need to fix it and stabilize it and tenant turnover. You might not be making money at acquisition. For fix and flip, perhaps you're making money at the end. For lease option, you're making money every stage of the way. And if it's, for example, income property, perhaps you make money when you can find a property that's under market value, when you make an embarrassing offer, which is totally fine as an investor. So that's your money in the buy when tenant buyer puts in their initial option consideration. Okay, so I'm going to go through one exercise with you. Just go through the numbers with me, because personally, even when I took the course, even when I went through my mentorship, I still wasn't familiar with the numbers, or I wasn't able to just find a piece of paper and go through the numbers with my tenant buyer or mortgage brokers I want to build the power teams with. Regardless, if this is where you are right now, you're in the beginning of learning how lease option works, go through the numbers with me, okay? So I will go through one actual examples that I have. It's a typical lease option. Because for homeowners, if they're first-time homeowners, they typically look at a property under $500,000. When I started investing, we typically look at a property under $400,000. Market has changed. It's a little bit harder to qualify as an investor. Regardless, usually we look at a property under $400,000. I've had lease option over that price range at this point. So let's look at a typical example. The tenant buyer saved up $15,000 to come in the program. So during the program, by the way, before we get to that stage, I usually mention it to my investor. Why do we have cash flow if we just rent at market rent? Because there's the option. How do we calculate the option? At Trust Your Talent, we always save the tenant buyer at least 10% when they convert their deposit to down payment. So say, for example, if the purchase price, not the purchase price today, if the option purchase price is $500,000, so just run the number in your head with me. If it's $500,000 as their option purchase price, they already save $15,000. So it's $50,000 minus 15. So that's $35,000. They still need to save up during the program. Okay, again, $500,000 if that's the purchase price, and we want to save up 10% for them as a down payment by the time they're ready. So that would be 500 times 10%, $50,000. They already save up 15. They need to save up 50 minus 15. That's $35,000. If they're in the program for 36 months, that means on average every month they need to save up about $9,000 to $1,000. Okay, that's how we calculate the option. That's how much they pay monthly. So in this particular case, their purchase price is about $540. So $540, my 540, 10% of that is about $54,000 minus $15,000 divided by 36 months. So that's roughly how it is. Depending on where you are, by the way, you have to understand different markets. In Ontario, there's land transfer tax. If you're looking at lease option, in Alberta, for example, there's no land transfer tax. So for myself, if it's in Ontario, I want to save them up a little bit more than 10%. Because if we save up a little bit more, they would have more money towards closing because they have to pay land transfer tax. In Alberta, it's not the case. So this one is in Ontario. I want to save them up a little bit more than 10%. So the monthly option is $1,150. The fair market rent in that market is $2,400. So every month, they put in $3,550, basically. That's their monthly payment to come in the program. Of all the expenses, that's $1,900. Expenses usually include mortgage, insurance, and property tax. Okay, remember there is no reserves. Usually you could put in a reserve. Sometimes I still do. Regardless, they're taking care of the minor repairs. They're paying all the utilities. So really all our expenses are mortgages, insurance, and property tax. So in this case, we cash flow $1,650. By the way, I have students, when I went through this example, they want to see the actual spreadsheet. This is the actual number. It sounds like a lot. You can even share with your investor 50-50, you get $825 of cash flow per month. So cash flow throughout the term, 1650 times 36. It's a 36-month program, 3-year program. Proceed as sales. So the investor put in initial investment of 86,500. By the way, when you calculate your return on investment is how much in and how much out, how much profit you can take out after all the expenses are paid. So the proceed as sales is basically all the profit minus the initial investment we have to pay back. So in this particular case, 49,600, divide that by the initial investment the investor have to put in. So it's 42% of return. Remember the example we looked at in the beginning of the class? If we look at 6% of return or 4% of return, imagine if you can get 42% of return, how quickly your money can run for you. Okay, so that's the goal of getting into lease option is cash flow throughout the year and return of your investment towards the end. How do we set them up for success? Number one, they have to be committed. Regardless of the number, it looks great. It's already a win-win for you as a working partner or for you as an investor. It has to be a win-win also for the tenant buyer for the program to be successful. And that's the topic today, how we set them up for success, how to make it a successful lease option or rental program. Number one, they have to be committed. That's why we usually start with a property first lease option. It's a property they choose, so they're committed to be homeowners. Remember, sometimes they also put in renovation. So they're committed to make it their home. Are they the type of people that will invest in their future? So they're committed for 3 years. Are they there to fix their credit? It's very important that they're coachable. So they don't do things that you're not aware of to damage their credit score again, or not able to pay for rent, etc. Make sure they're coachable. Your goal or your responsibility is also to check on them periodically, make sure they're on track. Perhaps it's you, it doesn't have to be you, or the credit specialist could also do that too. However, they have to be coachable. Will they follow the credit option? Will they follow what they need to do or need to get done throughout the 3-year program? It's really a commitment. Even though perhaps you think, I've dealt with tenants before, this is slightly different. You're also helping them to become an investor because they have to understand how money works, what it means to fix your credit report in order to leverage, in order to understand how mortgage work. So I look at it as, hey, from renters, help them become homeowners. Perhaps one day they're homeowners, they'd be interested in investing. I actually had tenant buyers tell me, Brooke, I want to do what you do. So first step, let's get you to become a homeowner first. Fix your credit and learn how money works first. And let them know, be clear about the exits. What happens if they don't follow the steps? What happens if they already invested and saved up option consideration and it didn't work out, or they back out? Help them understand that, hey, if you back out, what are the consequences? So it's very important to go through the option contract with them. When you go through the course, you'll realize that we make them go through a long checklist. They even have to handwrite what they are committed to, because then they cannot say, I don't understand what the contract is about. They actually, even though most people don't write anymore or pick up pen and paper, you still have to help them understand what happens if they don't follow the course. So we usually make sure they get professional advice if they need to, or they want to waive it, it's up to them. What happens if they don't follow the course? So basically, usually what happens is, first, do we extend the program? Second, do we sell the property and help them move out? Third, if you want to convert it to a regular rental. Usually that's how it works. You extend it, sell it, make it a regular rental, and if it doesn't cash flow, what are you going to do with the property? So in the contract, you'll learn that we have costs associated as well. If we decided to sell it, we have to make sure the agents get paid. We have to list it on the market. Perhaps we have to fix it. And usually whatever option is saved minus all the costs associated is what they get back. And usually there's nothing left. Because remember, you have to pay the agent 5 or 6%. So help them understand that if they don't continue the program. If they back out, they might not see their option consideration at all. Okay, help them understand. It's like a bank. We're basically their bridge mortgage. What happens if you decide not to pay the bank? What happens if you decide not to pay the mortgage? Are you going to get your mortgage back? Help them understand it's an investment. So for you as an investor, think about how quickly your money can run for you. So we mentioned that cash flow plus profit at sales, that's your total profit. So if the initial investment is $86,500, oh, by the way, I'll update the slides. Previously, I put the slide profit at sales as just the profit for sale. I'll update it with profit of cash flow, from cash flow, and profit from sales. Note to myself. So profit is whatever in and out. That's your return on investment. You get $109,000 throughout the 3 years. And remember to annualize it. When we talk about interest, it's annualized. When we talk about return, it's annualized return usually. So even if you're joining venture with somebody else, you're still getting 21% of the return. You get $49,600 at sales. How we run that number is sales price, the option purchase price for the tenant you're selling the property at, minus your initial investment, minus the lawyer fee, minus the land transfer tax, minus the mortgage you have to pay back. So after all the expenses, profit at sales is $49,000 roughly. So in this case, 42%. If you 50-50 joint venture with somebody else, that's 21% of return. By the way, usually as investors, we might be able to qualify for one mortgage. It's okay whether or not you can qualify for mortgage or not. So if you can qualify by yourself, one deal will bring you 42% of return. If you're sharing the wealth, I think eventually we have to share the wealth, or if you want to scale. So 42% simple interest, 21% if you join venture. What if you are focusing on getting yourself to financial freedom in 3 years? Let's just use 3 years as an example. I use this particular lease option because it's typically where a tenant buyer starts with some money saved, with a timeline of 3 years to help them save their credit, build up their credit score and save up the down payment. So 3-year term, $15,000 initial option. By the way, accounting terms, $15,000 that you received, you have to report that as income. So if you go through the same example, if you're able to find one deal per season, that's why sometimes we say it's a part-time effort. When you are starting as an investor, your first deal will be more time consuming, like anything else in doing life. Once you're more experienced, once you have the network of investors or network of mortgage brokers, you'll know how you work. Things will run a little bit faster. What if you just start with 4 lease options a year? So $15,000 is the initial option consideration. You get $1,650 per month. So let's assume you do one deal per season. If you look at the first year, first deal $15,000. Second deal, you do it in April. Third deal in summer, $15,000. And then every deal will give you a cash flow of $1,650 per month. If you split it 50-50, if you split it first year, you'll have an additional income of $51,000. Okay. Remember, when you look at the cash flow is when the lease option starts. That's why for the second deal, you will enjoy 8 months of cash flow. When you get to the second year, remember the first 4 lease option is still ongoing. So in the second year, you do the same thing. You still enjoy cash flow of the first 4 deals. So $1,650 per month times 12 times 4. If you get the second deal in the second year, and then in spring and summer and fall, in the second year, even if you split 50-50, you'll have an income of $91,000. Okay, just follow the process. The third year, the fourth year. By the way, as you go through the process, you'll start to complete the lease option program. So you'll start to enjoy proceeds from sale. So from the fourth year, for example, you're going to profit from sales, profit from the deals at the end. So if you follow the same course, in the fourth year, you'll have an income of $244,000. So if you're looking at replacing your income, if you're making a good income, 6 figures, 130, in the third year, you'll be able to replace your income. Okay? So if you just look at different strategy and how they're going to help you reach your financial goal. And are you not comfortable with that yet? By a show of hands, you're still a little bit uncomfortable with borrowing money. Well, good. Nobody is. Woohoo! Okay, Mohammed, thank you for the honesty. And thank you, Sarah, for raising your hand. Thank you for the honesty. It's totally fine if that's where you are. And another mindset reminder is that we don't borrow money unless we can make money. And I don't recommend everybody to borrow money. Perhaps that's why some tenant buyers are in the situation where they are, because they didn't understand how credit works and they borrow too much money. We're here to help them fix it. At the same time, as investors, you'll start to be more comfortable with debt, with borrowing money, and you will know when to borrow money. It's when you know how money works. And basically, that's how money is created. So if you haven't watched a YouTube clip, there is a movie called Money is Debt, or Debt is Money. Basically, there's no money existing in the world anymore. It's all debt or faith or fiat money, fate within the government. So you want to get into that because really it's about financial education. We're following the system. We're working within the system. So once you're more comfortable with that, I'll show you just with this current offer how you can improve your return on investment. Again, it is about how fast your money is running for you. So sometimes I ask the students how old you are. Sometimes we do a survey similar to what you did in the beginning. Where are you in life? If you're a little bit older like myself, you need to have your money running a little bit faster for you and learn how to make a better return on investment. It's not about how much it costs you, it's about how much it makes you. So even if you're debt servicing or if you borrow money, it costs you, say, mortgage at a certain percentage. As long as it's going to make you money, it doesn't matter how much it costs you. If I tell you that, hey, it's going to cost you $500,000 to make $1 million. If you want to make that million, make sure you know how to raise funds and find that $500,000 so you can profit from the deal and make $1 million. So make a profit of 500,000. In this particular example, let's run the numbers with me again. So again, refresher. We've already gone through the same numbers 3 times. Let's use the same example. You're gonna have an investor coming in with $86,000 as the initial investment. Same deal, you profit $109,000, 3 years. Your return is 42%. What if you take this offer and get a balance transfer of $20,000? That means that you don't have to save about $86,000. You only need to save about $66,000. And at the same time, there's 1% transfer fee. By the way, that's your cost of borrowing. So if you use the same number, now your initial investment, that money you save, that money out of your own pocket. If you have a calculator, or if you have your phone, run the numbers. 109 is your profit. Now your initial investment is only $66,000. You're enjoying a return of almost 55%. Almost 55%. Okay, so just get a little bit creative. Your money can run a little bit faster for you. If you're looking at how should I structure my portfolio in order to help me reach that financial goal, if you're at the point where you're accumulating capital, look for deals that's gonna generate a lump sum of capital. So if you look at the chart of different strategies, perhaps look for wholesale assignment deals, perhaps look for distressed properties to fix and flip. This is rough number. For example, the wholesale and assignment fee is not always the same. If you can find a deal with more money in the buy, if you can find a property that's significantly under market value, you can actually make more money. More people will be wanting to get into the deal with you. So say, for example, if you find a deal with $20,000 under market value, always leave money on the table for the next person to take on. You're not able to charge a wholesale fee of $20,000. Make sure you leave something on the table for the next investor. A lot of the times I see wholesale deal that basically took all the profit from the money in the buy. However, are you able to force appreciate it? Are you able to negotiate a better deal? If you're looking at passive investment, lease option, for example, $500 to $1,000, depending on the mortgage environment. The particular deal I showed you, cash flow actually $1,600 per month. But if you look at joint venture, that's $800 per month. Okay, so just look at it as a guideline. If you're looking at income property, once it stabilizes, see, after stabilization, look for a property that could cash flow about $150. So if it translates to what you're aiming for, I'm using this as an example. If you think you need $5,000 to cover your expenses every month, that is your financial freedom goal. That's how we define financial freedom and financial independence. So if you need a lump sum of $66,000 a year to live on, then perhaps you want to set a financial freedom goal of $66,000. If you look at different deals, not all the deals will generate cash flow. If you're looking at financial freedom, you'll focus on deals that's going to bring you cash flow. So if you follow this example, it will take you 3 years to reach financial freedom goal. So perhaps it only takes you a year and a half or 2 years to reach financial independence goal, because it really depends on what strategies you're going to focus on. If you're looking at accumulating capital and getting a lump sum per year, then perhaps you're able to reach your financial independence goal in 2 years or so. So that's how you plan to reach your financial goals. Investment is really a lot about mindset. So if you go through different strategies, whether it's distressed property, lease option, income property, a lot of it is about the mindset. The mindset I talked about, different income sources. Is it portfolio income, cash flowing, or earned income? Please translate it into earned income as capital generating. So you buy and sell to create capital. You generate capital buying and selling, and then you look for cash flow. That's your passive income. Portfolio income is where you accumulate wealth. So one of the things I ask the students to do once you get into the more advanced class is look at what's your net worth, because how do we measure wealth? Are you the top 1% when it comes to your wealth? By the way, if you're young, if you're say under 21, as long as you have $10,000, you're the top 1%. Every age group you jump, the net worth criteria to the top 1% jumped significantly. From 40 to 50, you basically have to double your net worth to be within that 1%. So make sure you understand how money works and how to take your money and make it run a little bit faster for you. However, I really think, as Jim Rohn always said, it's about the person you're going to become. So another analogy is that if you divide all the wealth in the world and give everybody exactly the same amount of money, in the end, it will end up to be in the hands of the same people. People who don't know how to hold wealth will not hold anything. People who know how to manage money, regardless of the market situation, whatever is happening, they will consistently be able to hold the wealth. It's really about you. So you might hear a lot of negative voices, especially when you start investing. Actually, even myself, I didn't tell everybody I was investing because I don't want to be judged. However, it doesn't matter. It's really about you. Just show by action. You'll also attract a lot of investors when they just see what you're doing. So Oscar, for example, if you have kids, your kids will see what you're doing and they will follow your example. You don't have to tell them what's a lease option. They see your work ethic. They see how you actually provide a life. And actually, that's one of my struggles. I think my kids are a little bit too comfortable. It's hard not to spoil your loved ones. Regardless, this is what we're about this year at Trust Your Talent. Be about it, because like Ted said, true financial freedom is spending time with whoever you want, whenever, wherever, and I really think it's time freedom. So I just want to share this with all of you. This is what we're looking for this year, and it's coming from the Queen, Beyonce.
Don't talk about what you're going to do. Don't just dream about what you're going to do. Don't criticize somebody else for what they're not doing. You be it. Be about it. Be about that action and go do it. Keep your eye on your intention. Don't let any outside distraction or your own insecurity stop you from your goals. Know that you're about to make the world turn. I see you. You are everything the world needs.
So thank you, everybody, because I see all of you when you turn the camera on. Actually, I love this webinar because I have a lot of people with your cameras on. That's also one of the ways to show your commitment. Even if you have to work, that's totally fine. And if you haven't realized that, this is the GPS I'm following today. It really all start from you. Whether you want to look at your earned income, passive income, equity, or portfolio income. So translates it to, do you want to accumulate your wealth? Do you want to generate cash flow to have the time freedom? Or you want to have earned income so you can accumulate some capital to get yourself started. So for those of you who are already investing, I want to take you to the next level. Educate yourself. I hope you're inspired by the example I just showed you. I know some of you are looking at deals, looking for deals, or looking for tenant buyers to get yourself started. It's not always easy. And if you read my book, I mentioned that I was really active in the beginning. And I thought, I'm here to have some time freedom. I actually spent too much time. I felt guilty. I didn't spend enough time with my kids. So I ended up analyzing deals and looking at the curriculum after 10 p.m. at night. So I sacrificed a lot of sleep. And then I realized, hey, I have to pivot. How do I do it more efficiently? However, if that's where you start, it's a little bit harder in the beginning for sure. So when I started, I advertised and I spoke to, I think one time, probably 100 tenant buyers. The 10 is worth, I received probably 100 applications, for example. 10 would be worth pursuing to the next level. And I would probably talk to 5. My very first deal came very quickly. However, my second and third took a lot of work. It will get easier, and that's my personal choice. You don't have to speak to every single one of them. However, I found I learned so much from it. My 45-minute call became 15 minutes, and I got all the information I wanted. So it's really up to you how you want to take this. However, I think a lot of us on the team, or also some of the students here, are already showing themselves as examples as to what we can do. So all of us or even the students are active investors. A lot of it is the mindset, because what if nothing happens in 2 months? Are you going to sustain until the 3rd or the 4th month? So mindset is very important. And when you are just getting started, SMP. So self-assessment, goal setting, and the strategies. So today we went through one strategies, and you can see how powerful one strategy could be. And why we focus so much on the mentorship at Trust Your Talent. So once you're part of the program, we actually call it mentorship program. So even though we're all trainers, you will be focusing on particular strategies. Really, it's about the support, the direction, the training, the motivation. Because with the technology today, you could probably watch a lot of YouTube clips or even TikTok. I get a lot of information from TikTok, by the way. However, it's not filtered information. So for sure, you can learn about different strategies and how different people work. And I also mentioned, hey, a lot of it is business decision. Do you want to set up tenant buyer for a 2-year program, 5-year program? I rarely see 2-year programs now. I think a lot of the times people are optimistic. And regardless, it's your business decision. And we're here to support you. I mean, we're a team. Your mentor is here to check your blind spot, but really it's the whole community with a lot of support. That's why we kept saying, hey, get to the networking event, reach out. And we have Mastermind Collection where we meet monthly or so to make sure everybody's on track. And of course, the webinar is here for all of you to attend and even bring people who you think can benefit from it. So again, if you have a mentor, reach out to your mentor. If you're looking to pivot, if you're not sure where you are right now, reach out to our support, our strategy coaches. And the next thing is to join the workshop. And back in the days, we flew everywhere for the live courses. I mean, people are so used to Zoom right now. I do benefit from seeing people in person. So I used to take courses in Vancouver, even though I was based in Toronto. People don't do that much anymore. I still highly encourage you to do that because you can also check out the market. Even if it's not a market you want to focus on or be in, you can do market analysis in any market once you start to understand how investors work. Okay, so take a picture of this if you want to join the next webinar or be with us live. And usually the next step is to join the workshop. And this is what it's like to be part of the workshop. Thank you all for joining me today. So I promise to stay behind if you have any questions. As long as you have questions, I will be here. So for those of you who are still new to the community, whatever platform you're comfortable with, we are on Instagram, Facebook, and also take a picture of the QR code if you want to binge on my daily dose with Tim. And also trustyourtalent.ca. We have currently improved our website. So if you're looking for the schedule or what courses are available right now, so currently creative financing is ongoing. Look for the next course you can join. So I know a lot of you were there at the annual conference. It's really an energy boost when we're all together, when we are talk about not just investing, our family, our journey all together. So it's more like a family to me, my other extended family.